We got the index. Called the index universal life insurance. Okay. There were two parts. What is that? It's umbrella. So umbrella can cover, if it's raining, it covers rain, right? But if you have some family disaster, and you can cover, right? If something happened to your family or.
Get two umbrellas.
What you do is, let's say for example, let's say you got a $500,000. The coverage, we call the face amount. And 40-year-old male, health is normal. So every month, let's say for example, you pay $500 a month. When you pay $500 a month, pay to insurance company, and in the $500, the percentage go to the insurance. We call the cost of insurance. And the risk money go to the cash value. So each program combines the two parts. One is the insurance protection, and that's for because you pay the cost insurance. Another one is called the cash value. That's your saving. Is your saving. So today we'll talk about the two parts. Both will talk about the protection and the saving. So first, what is the program can do? What they can do for your family. Number one, if something happened to you, let's say you got a policy and you die, then what if your family get a protection? And your family will receive, $500,000 plus the cash value if you use the death benefit as the increase option. That's so first you get a family protection. Number two is the cash value. The cash value you can use for emergency fund. Let's say I need to go to vacation. I need to pay for I want to buy another house. So you can use the cash value. That's we use it for emergency fund purpose too. Number three, who has young kids? And how old are your kids?
6 and 2.
6 and 2, right? I have 2 kids, 12 and 17. So if kids want to go to college, and you can use the money inside for the college. That's how we can use the college education, for the education fund. And when we talk about the education fund, we touch a little about what is the education program in the market. Have you heard about the 529 plan? And also the education IRA, right? So those are two typical education program, and we save the money in the 529 plan. So when the money grows, making the interest or capital gain, you don't have to pay income tax for capital gain and interest if you use the money for the kids' education. That's how the U.S. government give you the tax benefit. It's good. But at the same time, when you put money in the 529 plan and education IRA, it also give you limitation. Why? When you apply for the scholarship, the university will ask you how much money in the 529 plan and how much money in the education IRA. So they have to count the value from those account, and then they will reduce your scholarship. That's how somehow we put the money and it's not good for us. And the second, if your kids want to go to the medical school, law school, and you have money there, and oh, Daddy, I didn't want to use your money. I want to borrow money from from government, from the financial aid. And if you have money in never, sorry, the financial aid will not give to you. So that's how that right now we can use the money from this program as an alternative way to funding our education. Number 4. So you can just talk about the retirement plan, and for the retirement plan, right? You can use the IRA, Roth IRA, 401k, or any other savings from the bank or Social Security, right? But this program is also another powerful way to fund your retirement plan. Let's say that you are 65, you want to use the money. Either you can withdraw from your IRA or 401k. But when you withdraw your IRA and 401k, do you need to pay income tax?
Yes.
Absolutely. Okay, since I talked about this, I want to just give you some more information. Right now, when you save money in the 401k, what is the purpose? Retirement, right? Also, you want to get a tax deduction. Is that true?
Yes. Right.
Because you want to reduce your tax. But we never know what will happen in the future.
Right.
We never know. And you think right now you get a tax deduction, you get tax benefit, but in the future it can generate high tax liability for your next generation. Okay, you may not understand what I said even to you. Okay. Next, right now I save 401k every year for 10,000 in 401k for 25 years, and when I retire 65, I have $500,000 in the 401k, right? And so I start to withdraw from the 401k when I retire, and every year. If I have other money, I may not withdraw from 401k until 70 and a half, right? Because 70 and a half is the age you have to withdraw. By 70 and a half, if you don't withdraw, so what I give you penalty? 50%.
50%, you lose 250.
So with by 70 and a half, I have no any other choice. I have to withdraw the money. But if when you withdraw the money, you pay the income tax. The problem comes when you die, and if I die, my kids will get my 401k, right? When the kids get the 401k, they have to follow the IRS, the rule. They have to do the minimum withdrawal every year. But if my kids, they're doctor and a lawyer, they make a pretty good income. When you add your 401k to the tax, to the income, you will hit the highest.
You pay more taxes.
You got it?
Yes.
And this just happened in my office. One of my agent, and he is 67 years right now. His father passed away 10 years ago. Had a 401k. When he got the money every year from his father's 401k, because he still have income, he has business. So right now his tax bracket hit and what is it? 39.6%.
40% almost.
This is the tax bracket.
Yeah.
May I join there?
36.
39.6%, right?
Yeah.
And that's for the federal. And unfortunately, in Georgia, instead of Georgia, we have to pay another 6%.
State tax.
State tax.
State tax.
So what is it? 39 plus 6, that's 45. 45. So every $100, you have to give the $45 to the IRS. For the 401k from your old generation, means your parents. And he said, "Oh, David, I wish my dad is spending those money." Right? If he spent all the money before he died, he maybe only paid 10 or 15% because he didn't have an income, right? But you know that sometimes the people don't want to spend, they want to still save, right? They don't understand that whenever you die, the IRS will come here to get a bigger part from you. That's how when we save money in the 401k IRA, we need to be careful. That's it. So this is becoming the one retirement plan. And the number 5, I'm still that you can use this one in the future as for your business purpose. Why I say you use it business purpose? This right now in Georgia, we open a business, let's say a gas station business. So we are 50-50 partner, right? So we are pretty much engaged in the business every day. But somehow, one day, either one of us dies, and then another, the partner, the family come here. Hey, I want to cash my share, right? So then you buy the share, right? But the most time, do you have enough cash to buy? Probably it's not, all the time. Sometimes you have money, sometimes you don't have money, right? That's how we use they call the buy-sell agreement, use life insurance. So what they do is I'm buying insurance for you, you buy insurance for me. So if I die, you get my death benefit. And you use this benefit to pay my family, get all the shares. If you die, I get the money from your insurance company, so I use money to buy your business. That's what the buy-sell agreement is. And it's very popular for for small business and law firm and their other firm, because they didn't know whenever one of the partner passed away, they didn't want the family engaged in the business. That's how they have to buy back that plan. It's called the buy-sell agreement plan. And then another thing, we talk about there was 3 stages. Either you die too soon. You die 30, 40, 50, right? Last night got a text message. One of our high school classmates just passed away. Man, you say that's too young. It's only 47 years old. Either you die too soon, that's how you need the insurance for your family, life insurance. How about you live too long? So you need the money, right? So what they can give to you, are new to give you money. How about between that if you're sick? The 3 stages, we only have 3 stages. Either we die too soon, or live too long, or we're sick.
No more choice.
If we're sick, what means that we need to go to see the doctor, and that's one for the situation. Or we stay at home. We need the home nursing. And most time we didn't worry about it if we go to see doctor, because in each country there were 2 the program can help you for the medical expense. One is the Medicare or Medicaid, right? Medicare and Medicaid. If you have money, you use Medicare. If you don't have money, you use Medicaid. And for medical expense. But the question is somehow your health issue is not too bad. It's not to say, oh, you will die soon. And it's you get after let's say you have complete surgery, so you cannot move. You sit at home. You need a home and a nurse come to your house, right, to take care of every day. That's called home nursing. And the home nursing is another big need for people when they get into situation. But the Medicare does not pay, and only you have Medicaid. But how many of you want to become you didn't have any money? If you didn't have any money, then you take care of Medicaid. But most of us didn't want to get in that situation, right? So that's